Okay, so in the last video, we discussed about some of the qualitative factors to identify uh, good stocks. And always remember, when you're investing in stocks, you are investing in business. So, if you recall some of the qualitative factors that we discussed in the last lecture on qualitative factors, is around factors are around basically uh, identifying businesses that you understand and understanding of its operations. Do you understand uh, customer retention? Is the business in uh, the is the business in the process of selling the same products, over a long period of time? How much control do they have over pricing? Taking inflation into consideration, so on and so forth, right? So those are some of the qualitative factors that will help you come up with a bundle of stocks. If you want to like even further drill down on those stocks, you should definitely look at some of the quantitative factors. So in this video, we'll discuss on those quantitative factors. Uh, I would put a disclaimer that this is a research based on my own studies and referring to a lot of the books. Please do not invest purely based on these. Do your own research and do not take this as a financial advice of any sort. So, coming to the quantitative factors, you should look at uh, how the earnings have developed over a period of time as compared to the number of shares. Typically, good signs are around showing an incremental trend. It could be very steep, that could lead to maybe a very high growth kind of company. It could be stable, So, essentially, you need to see earnings actually, growing. Um, Another factor that you should consider, which I think most of you are familiar with, but making it more relevant to the shareholders, is net profit on the shareholder equity. So imagine you are comparing two companies. One is generating a net profit of let's say 15 rupees, other is generating on a profit of 2 rupees. Both of them have around 100 shares open in the open market, right? So which one would you consider? Easily, you can pick up this. So this also helps you to kind of drill down, or like help you shortlist some of the stocks from your maybe a larger list of stocks. Uh, I think you would relate to the fact that a lot of the companies can probably self-sustain on the profit that they're generating, but when you are looking to expand your businesses, you will go and look for debt either from financial institutions or from banks or government, uh, you know, government sources, things of that nature, right? So generally, if you look at companies, and look at the amount of debt that they're carrying, if you can identify that they can pay back their debt in let's say 4 to 5 years time, then those are good companies. So for example, a business generating 25 crore in net profit uh, has a debt of around 90 to 100 crores, and there's another business that is generating only 10 crores of profit and still wants to take on 90 to 100 crores, right? So you can obviously go ahead with this business, invest in this company, because the time horizon to repay the debt is around 4 to 5 years, right? And the final factor I think that you should probably consider is how good is the company in giving out dividends and maybe doing share buybacks. Although I would say that dividends and share buybacks are not a, I would say, a very indicative, because in some cases in very early stages the companies do not have such kind of, like, you would say, sources where they can actually pay out dividends, right? So I would say that yes, if the company has maybe been around for long, then you can definitely consider this factor. But this is by no means, an indication of a good or a bad business. So these are some of the quantitative factors that you should, look into. Thank you, and if you have not subscribed to my, channel, please do so.